Okay, hello guys. As you can see today, we are focusing on Tembiso Limited. I'm not gonna waste time. I'm just gonna go right ahead. Okay, as you can see here in front of me, I've already drafted a skeleton income statement. So I'm just gonna go straight through to the income statement. Okay, so the first thing that you notice here, you know the name obviously. So the name of the company is Tembiso Limited. Okay, so the next thing that we need to check is the financial period. When was this income statement supposed to have been drafted? You get it? Yeah. So the financial period that we're given is that they're saying you are provided with information for the financial year that ended on the 28th of February 2018. So it means what? It means that the financial year started on the 1st of March 2017. Hence, it is ending on the 28th of February 2018. I don't know if that makes sense, but this is like stating the obvious. I always do that. Like as soon as you start a question, always state the obvious. Okay, so as you know, as you can see in front of me, I've already started my income statement, like starting with the skeleton basically. So you know, obviously your income statement starts with your sales. Okay, so you know where to look for your sales, right? We look at for the sales in our pre-adjusted trial balance. Okay, so I noticed here we are not given the sales figure, but we are given the cost of sales. So let's check under the adjustments if there's anything to related to sales or anything to do with the sales. Maybe something that can help us calculating our sales. Okay. So I go to my adjustments and I notice already the first question, what is it? The first adjustment, which is A, it says sale of goods. Okay, so the company maintains a markup of 40% on cost. Note that old goods costing 96,000 rands included in the cost of sales were sold at 10% below the cost price. This is also interesting because like we are not given what the sales figure, but we are given what additional information, and they're telling us that the company itself, they do what, they maintain a markup of 40% on cost. You get it? So it means what? It means that you'll be able to work out your cost of sales. Okay, hang on a second. Before we already do our adjustments here, let's reread the question, like the adjustment one more time. It says the company maintains a markup of 40% on cost. And then they saying note that old goods costing 96,000. So the 96,000 was the cost of old goods that were sold. And they are already saying it was already included in the cost of sales. And they were sold at 10% below the cost price. So these goods were sold like 10% below the cost price, and they have already been recorded. So do we need to record them? Okay, that's a question. Okay, so for me, I use my own method on how to work out the the sales. So I have my method is usually, I don't know, someone actually said it's the Cremora method. I didn't know that. For me, I call it the have and have not. So I know that I have sales, right? And then there's cost of sales, right? Cost of sales. And then there's also what? Gross profit. This is like the first three of our income statement. So question now is, do I have cost of sales? Yes, I do have to. I know, like cost of sales will always equal to how much? 100%. So this is what I will do. I'll just write 100% next to cost of sales. Okay, and then for sales, we are told that they maintain a 40% markup. So we know that for sales, it will be equals to the 100% from cost plus a 40%, right? So it means what? We have how many percent for sales? We have 140%, right? And then for gross profit, it means what? The 40% there, the markup, is actually our gross profit. I don't know if that makes sense. So now I know that based on the statement, based on the pre-adjusted trial balance, I have been given what? I have been given the figure for cost of sales. So I'll take the cost of sales figure, which is 4,856,000, and write it down here. Now the question is, what is it that I don't have? Remember, I have the haves and I have the don't have, right? So these are my haves. I have the haves. Do I have the don't have here? Yes, the don't have is under what? Is under sales. So I'll put what? I'll put an X here. Okay, so since I've already put the X here, you know the rules of maths or math literacy, depending on which one you're doing. It says what? When you have something like this, you do what? You have to cross multiply. So in this case, I will do what? I will cross multiply. Okay, don't mind the 40% that is below here. I'm only focusing on the 4 at the top. Sales 140%, cost of sales 100%, and also the 4 million something. Okay, don't forget this side. I have indicated that this side is percentages and this side is for what? For rents. Okay, so the next step for me now is do what? Cross multiply. So when I say I cross multiply, it means I'll say the 100 multiplied by the X, right? And then the 4 million multiplied by what? By the 140. Okay, so if I do the magic in my calculator, let's see. So I'm saying 140 multiplied by, remember, you don't multiply it as 140%, you multiply it as a number. So it will be 140 multiplied by 4,856 000. Okay, and this is the figure that I'm getting. I'm getting 67984. Okay, zeros. Okay, so this is a big number, as you can see. It's impossible for us to just write it as it is. Okay, so we'll do what? It's equals to 100 what? 100x. Okay, so I'm getting what? This is equals to 100x. So as I have something like this, math says you have to do what? You have to have, what is it? X must remain on its own. To get the X on its own, we have to divide by what? Divide by the number. Okay, that has what? The X next to it. So do it both sides, because what you do on your left hand side, you must also do it on your right hand side. Okay. Okay, so if I divide this number by 100, okay, so X is remaining on its own, as you can see. And then this side, I have 6798400. Okay, question now, why did I decide to use this method? I use this method because not a lot of people know when to multiply. Do I multiply or do I divide, right? And also sometimes, like, you might find that some people will just struggle with the percentages. How do I work out the percentages? To make it easier, this is what I use most of the time. But if you know your things, you can just use your formula, as long as we get the same final answer. Okay, but it doesn't mean that we are done with this one here. So I'm just going to move on to the next part. The next part, it talks about the 96,000. Okay, the 96,000, don't forget, it's also a what? It's also a cost that has already included in the cost of sales. So since it has already been included in the cost of sales, let's see if we can adjust this amount in terms of our sales. Remember, this amount has been sold below cost price. What do they mean when they say that it has been sold below the cost price? It actually means that it was actually sold for how much? 40% plus what? The 10%. Okay, 40% plus, sorry, okay, 40% plus the 10% divided by how many percent? By 100. So the final figure should be 96,000 multiplied by 50 over 100. This is what? 48,000. Okay, so if you want to ask me questions regarding the 96,000, you're more than welcome to do so. Okay, so I have what? I have this amount, which is what? The sales portion of the 96,000. So basically it means what? It means maybe this was something like this plus 48,000 and you get it. Okay, but we are not focusing on this one. We're just looking for the sales portion. So now that I have 66 million 798, okay, something, you get the question. Okay, and then I'll do what? Minus the 48,000. Okay, so I already have this. I am taking it straight into my income statement. Okay, income statement. Okay, so in my income statement, now I know that I have my cost of sales, which is 4,856,000, and then for my sales I have 679,8400 minus 48,000. Okay,